Hello, traders. It's Ryan with Stock Investing and Trading 101. Today we're doing a trade update for Thursday, May 20th. We've had a pretty good day so far trading. We've had semiconductors and the NASDAQ pretty much leading the charge, which I'm currently heavily invested in. But overall, pretty good day for the markets. So we're up nearly 2%. We have the S&Ps up 0.65% and the NASDAQ up about 1.5%. So the NASDAQ is definitely outperforming. Currently today, we are up about 1.75%, which is about $450 today. So a pretty decent day so far. We're only 50 minutes into the trading day so far. So what I mentioned in my last video is I have been aggressively buying the dip that's been in technology for the past couple of weeks. It's pretty much kind of slowed down the dip. As you guys can see, pretty much for like the past month, there's been a slow dip. But pretty much during beginning of May, there was the worst of the dip, and it looks like it bottomed around May 12th. So pretty much during the beginning of May, I was buying very aggressively into a number of different stocks, technology stocks, Microsoft, Apple, Facebook, AMD, a little bit Tesla, Amazon, stocks like that, high quality growth stocks that pretty much everybody owns. So I bought the dip. I had plenty of cash available for the dip buying. And since then, the markets have rallied pretty hard. So we have our kind of bottom somewhere around May 12th. Yeah, here's the bottom on May 12th. And as you guys can see, it's pretty much just been going up since. We had a small pullback here, but it's continuing to go up today. So it looks like buying the dip was a profitable trade for me. So I bought the dip. I made a bunch of profit, and for the past couple of days now, I've been trimming my positions. I've been taking a little bit of the profits. So far, I've maybe trimmed, 25 or 35% of my position. For example, with Apple, I may have had, $1,500 invested or, $1,300 invested, and I trimmed it down to just 900. And I kind of did that for each position that was profitable, just to lower my risk, to get my cash buying power back in my pocket, just in case the dip, continues tomorrow. That way I have buying power available to buy and lower my average cost basis, and just to overall lower my risk, because I like to take profits and I like to keep lower risk. So with that being said, that's pretty much how I've been making profits for the past week or two. As you guys can see, the portfolio is up over $1,000 this week, about 4.5% this week. So we've had a pretty good trading week, I will say. And it didn't come from really anything fancy. It wasn't from like fancy options trades. It wasn't from, anything technical. It was pretty much just from buying the dip, buying high quality companies, buying low and selling higher. So that's what we're doing. We're still holding plenty of our investments and our positions because these are high quality companies, and every time that I try to sell out of these companies because I think they're going to go down, they continue to go higher, and then I pretty much have to wait for a dip buying opportunity, which sometimes that can take months, and that's pretty much the position I was in before this latest dip. So this time I recognize that, and I make the decision to hold these positions and not sell out of them completely because I don't want to put myself back into that position. So I'm briefly just going to kind of scroll through some of my positions so everybody can see what's going on. I have a kind of a big position in Sony. I've been buying the dip, trying to lower my average cost basis to like $93 per share. Unfortunately, I would have to invest too much into Sony for it to be worthwhile. So But we have tons of good positions. We're selling covered calls on Palantir, Workhorse. What else do we have? That might be it. We've actually lowered our premium selling. We also have a little bit of Rocket Mortgages, I believe. Rocket Companies is, I think, about $17 per share. So I bought that at around 16 and change. I think that was a good buying opportunity. But all in all, majority of our stocks at this point are profitable. And I'm just trimming some positions. I have about 25% of my portfolio in buying power, so about $5,500 in buying power to buy any dips. And yeah, that's pretty much where we're at. So that's how we made $1,100 this week. That's how we made nearly $500 just today. And it doesn't take rocket science to be a profitable trader. There's millions of trading strategies out there. A lot of them are very complicated, but there are extremely profitable strategies that you can do with very little, crazy strategies or planning and stuff like that. All you have to do is know what stocks are high quality, what stocks you want to own in your portfolio, wait for a buying opportunity, average into your positions, try and get a good average price, and just wait for it to get to a profitable price, and you can sell or you can continue to hold, whatever you want to do, depending if you're a long-term investor or a short-term trader or something in between. But that's pretty much where we're at today, guys. This is Thursday, May 20th. Once again, this is our trading recap for the day. We had a pretty good day, up $500. Definitely nothing to complain about. At the end of the week, I'll be doing a week recap for the entire week. But so far, it's looking pretty profitable, up nearly 5%. So, as always, guys, thanks for watching. Don't forget to smash that like button. Drop a comment if you haven't already. Let me know what you're buying, what you're selling, kind of what you're doing in this market. I'm interested in hearing everybody's comment below. So don't forget to do that. As always, thanks for watching, and we'll talk to you guys soon.